Hello, and welcome back to another episode of the Collective Clicks podcast. This is your host, Brandon Bateman, and today I'm joined by Adam Whitney. Adam is one of my favorite guests that I've had on the podcast. We talk all about business, his mindset around business. We talk about building a competitive advantage in your real estate investing company and a specific exit strategy that he feels like most real estate investors are sleeping on, but they're making an average of $60,000 a deal with manufactured homes. I'll see you there. Adam, welcome to the podcast. How you doing?
Great, man. Thanks for having me. I'm excited to be here, brother.
Yes, excited to have you here as well. Um, for anybody listening that doesn't know who you are, what's the brief background?
Yeah, so I mean, if you don't know me, my name is Adam Whitney. I'm the CEO of Seven Figure Flipping, which is a real estate house flipping investor mastermind. But I run a real estate investment firm called Blackjack Real Estate out of Florida, and that firm has done a little over 1,400 deals completed, and that doesn't include any of the commercial multifamily or apartments or anything like that, or residential rental portfolio. Those are just kind of like the active transactional deals that we've done. Um, we've done a lot of different marketing strategies. We've been a big 30 plus person in market belly to belly team. We've been a virtual team. We've been a VA heavy team. So we've had an opportunity to kind of shift with the marketplace over the years, which has given us a really good understanding of uh, appropriate pivots and building the right team around the current market. And for me specifically, um, I my 30-second backstory is I grew up in the hood in Detroit. My mom was a crackhead. My dad was an abusive drunk. I went to jail when I was 18 for going into an ex-girlfriend's house, and unbeknownst to me, she had a boyfriend there. I beat him up. I got charged with home invasion, assault, and battery, and I was going to get arraigned in the third precinct or district court in Detroit, and facing meaningful charges for what felt like a you know stupid girl thing. And fortunately, a Marine recruiter had asked me if I wanted to join the Marine Corps, and I'm like, I mean, I'm in trouble. Can you get me out of trouble? I'll leave tomorrow. And he said, maybe. So he went to court, which they're not allowed to do, by the way. Went into the back room, talked to the judge. The judge came out and said, if you go serve 4 years honorably in the Marine Corps, I'll put this under a program, a youth program called HYTA, HYTA. It's a youth program that would expunge it off your record if you did something. And I said, okay, cool. They're like, you ship out in 2 weeks. And then I ended up enlisting in the early 2000s, hit the Iraq War for combat deployments, and then I graduated high school. Like I was in a really dark place. So I graduated high school with a 1.954 GPA. I was fourth from the bottom. So I didn't have a lot of options in terms of like jobs and, where I was going at that time. So I was an infantry guy in the Marine Corps. So basically a bullet sponge. And obviously going into the Iraq War. And I really loved that it completely changed my life in the military. It just redirected all my energy, showed me what values meant, showed me what good leaders were. And I eventually ended up going to college, and then I got selected to become a Marine officer, which you have to go graduate college. They sent me to University of Michigan's NROTC. I graduated college, became a Marine intelligence officer. They gave me the highest clearance you could possibly get, which is kind of crazy understanding my background. And I did some really interesting, high end, exquisite technological work against foreign actors all across the globe. I retired from the Marine Corps in 2024. I'd been building the real estate business prior to that, and we even when we're small and like lifestyle business, we never have done under $1 million in gross profits in our business. So we've been everywhere from small to really big to medium in our business, and today we're just a extremely efficient business, and we really focus on net profit.
Yeah. Noted. I felt like I knew you pretty well, and I did not know most of that. I only know
I
the
didn't think
second.
you
I only
would.
knew the second half. Yeah, that's crazy, and I never ever would have guessed that that's where you came from. I'm really curious as you were, I guess, changing your direction. you mentioned good leaders, like the culture of the Marine Corps, and all that was like a big contributing factor. I'm just thinking from the standpoint of, like, I think it's a big responsibility to own a company where you employ people, right? We have to remember there's like
Huge.
people who we're going to employ that are in all kinds of different situations, right? And for so many of them, your company could be a good stepping stone either towards good or towards a worse direction for their life. Like, I'm just curious if you had any advice for somebody who has a team, especially a young team, what would
Yeah,
it be?
I think as young small business owners, we're so focused on the future and the next thing and the next thing, and like growth is really important, but you have to have principles and values and fundamentals that you say, live, and do over and over. That's what I learned in the Marine Corps. Like, think about this. It's 175,000 people in the Marine Corps. It's the smallest service, $50 billion budget, which sounds big, but it's tiny, tiny scraps. They do way more with way less in terms of resources. But if you can't find a Marine Corps leader that wouldn't tell you their number one asset is their people. It's not just their people, but it's the resiliency and the shared values of their people. The Marine Corps has three core values, which are honor, courage, and commitment. And they just like you're just consistently reminded of those values every single day for 20 straight years, every single day. Like nothing sexy. It's the same thing: honor, courage, and commitment. Now, there are also microcultures in an organization. So, for example, in the Marine Corps, you have pilots, you have infantry guys, you have support guys, which all each come with their own kind of micro competitive culture. And in the infantry, which is maybe the most miserable part of the organization you could be in, you do the most arduous, terrible stuff for the same little bit of pay. And I like to say the only good thing about being an infantryman is the pride, is the ability to say that you're an infantryman because you've done harder things than everybody else. Everything else sucks. But the pride in it is so elite, which makes those people so elite. Their ability to endure adversity and hardship is unparalleled. If you think about how that transcribes into business and how you show up into business, is the culture like those guys come from all around the world with backgrounds like me where they ain't got a whole lot of options, so you become a bullet sponge in the Marine Corps, right? And think about this: like at that time I joined just after 9/11, and we're in the height of it. Like we're all going to combat. Like people you're leaving with today are not coming back alive, and you're going to do that at an elite level and execute at an elite level. This is an all volunteer force. Like, why would somebody do that? Well, you do it because you have no options. You get in it and you stay and you keep doing it and you keep rising at an elite level because of the culture.
Yeah, absolutely, that makes sense. So I'm curious. So that was your experience with that culture, which to me seemed very impressive given the number of people. Like, to keep a culture strong in a smaller company, I think is a lot easier than keeping a culture strong in a big. I mean, I imagine even the fact that it's a government agency would make it a little bit harder.
Challenging.
That's got to
And,
be a
and,
huge challenge.
and Brandon, a third of the workforce rotates jobs every 3 years, every year. 33% changes jobs completely. So you go to a job, you take a position in the Marine Corps, like regardless of what your job, like you're an infantry guy, you still do multiple things within that. So I'll go do something for a little over 3 years, and then they'll move me to something completely different. By the time I master it, I'm doing something brand new. Every single year, a third of your entire, can you imagine if a third of your entire company turns over every single year? How
Yeah.
good are your standards? How good are your procedures? How good are your leaders at bringing other people up to speed? Because you personally could never retrain a third of your company every single year from
Yeah,
scratch.
absolutely.
You,
Yeah,
you wouldn't make any progress.
absolutely. So I'm curious, right now I guess you could say responsible for a couple cultures. You got the blackjack RE side, and then you also have the seven figure flipping side. So when you take those lessons that you learned in the much larger culture, and you think like, what are the actions that you've taken in the past that have been most influential, and also the things that you're doing consistently on a daily or weekly or monthly or quarterly basis today in those companies? What does it look like? Like, what does the experience you have translated into action in your business look
Yeah, I
like?
think I think from like let's just talk at a bit of a macro level for a second. So in seven figure flipping, what I mean, there's you can't swing a cat without hitting a real estate mastermind. Now, of course, not all of them been around for a decade plus with success, but nonetheless, marketing is attention. People are seeing on the internet what they're seeing. So what makes us different is that our culture is just slightly different. We're not better or worse than anybody, but we believe in service, legacy, and impact. And everything we do, my job as a leader to ensure people understand how it is contributing to service, legacy, and impact. We have 5 core values in our company: extreme ownership, stewardship, hardship, integrity, personal and professional development. Did I hit them all? I think so. So like those our company is founded on service, legacy, and impact, and who we are is those 5 core values. So simple things, dude, the simple things that we never want to do. First off, I know people talk about this on podcasts all the time, core values, but like, how do you implement that? That's very intangible. That's very esoteric. You implement it 2 ways. Number 1, people don't need to learn something new. They need to be reminded over and over again. So like if you're any kind of meaningful company, you have a company sync meeting at least once a month, like a all hands company meeting once a month, most likely. Just get everybody on the same page. Every single one of those, we talk core values. We don't even get into numbers, what we're doing, until somebody recognizes somebody else and covers all of those core values. Every single time without fail. So like, that's how you create the culture. It seems so simple and you want it to be more, but that's all it is. That's one. The second part is you as the leader and your subordinate leaders must embody those. Everything you say or do as a leader, people are watching you. You are always on. Whether you like it or not, you are constantly being observed by your people. So it is your job to embody the right behaviors, professionalism, core values, always 24/7. In your off time, in your on time, it doesn't matter because that is the requirement of a leader.
Absolutely, that makes sense. Yeah, thank you for sharing that, Adam. So if I understand right, the tactical implementation with the monthly company sync is that you have people within the company highlighting other people within the company in that public setting for specific values.
Yep.
That's just one
Exactly.
example. Like if anybody's listening to this and you're not doing that, like, and I can tell you, ironically, I don't know if great minds think alike or if this is just standard practice. Like I do the exact same thing
Beautiful.
in my company where we have a section of our company sync where you can look on the screen there, you can see the values, and now it's kind of open floor for anybody to say, I want to highlight someone else in the company for one of these values. They have to tie it to the value. And yeah, we didn't always do it that way, but I think that's my favorite way that we've done it.
And honestly, Brent, like, well, first off, you guys are, arguably the most successful digital marketing company in the country in the real estate space. So that 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 makes sense to me. Like, I'm not surprised by that for you guys. And it doesn't always feel like it hits. It kind of can sometimes feel awkward in the meeting. I don't care.
I
And
love
I'll
that.
sit there in silence if nobody says anything until we say something. You know what I mean? It's that important to us. And it's up to us to kind of set that example and the importance of that thing.
Yeah, absolutely. And I think you described core values in a very fair way, where I think if you're doing core values right, it's probably uncomfortable how often you're touching on core values and how baked into everything it is to the point where like you almost want to feel like you're gonna roll your own eyes because you're like, why do we keep on talking about this? Like that's probably how you know you've arrived at like the appropriate amount of discussion around core values.
Absolutely. Totally agree
It
with that.
doesn't feel right. It feels like it should be less, but you're the person, right? Of course, like you're going to be more involved with all the value discussions than anybody else is. So that
Indeed.
makes sense. Well, let's talk about the journey that Real Estate has been through because it's one thing that was super interesting to me is how when I first met you talking about the background, you built this company pretty significantly while you were still working another full-time job, which I think is kind of unusual. a lot of people they move on from the job once they reach, some level of business success. That's honestly probably many steps back from the level of success that you had in your real estate investing business at that time. So I'm curious about that journey. And would you do it the same? And then I'm also curious because you've done so many different team structures and you've done bigger, you've done leaner, like all that kind of stuff. I'm really curious how you would describe why you've made the choices you made recently and what advice you would give to someone else.
Yeah, the first question in terms of, building a business while working, when you look at somebody, I always like to hear when people say this kind of like on a stage or something, your mess is your message. You look at a lot of successful entrepreneurs, not all of them, but there is a good grip of successful entrepreneurs who have some type of adversity they've overcome in their life already outside of business. And I think you probably have felt this at times as a business owner, especially successful business owners. Like there's adversity, there's hard times, there's payroll, there's like it's not always just collecting a bunch of millions of dollars. Like there are times when you're broke, you're legitimately broke in business. Like that happens. I'm not saying like in an entire year, but maybe a month is tight or a week is tight or, a quarter is tight. Like that happens across all business. And
And years,
most people,
honestly.
yeah, and sometimes years that we
Yeah.
have bad years. Like that's totally fair. And I think most people that's where they crumble and they really start to question, is it worth it? They don't have the kind of innate belief that what they're doing has a purpose and a mission beyond money. Because if it's just about money, you're never going to make it past that adversity. So I'd say that to tell you, like, finding my mom dead in her apartment when I was 17 years old and going to jail and the adversity of my rough upbringing and then going to combat. And, I have 13 friends from high school who have overdosed and died. I've got another 13 to 15 friends who have died by their own hand or in combat. Like, I've just been exposed to things that have created a callus for hard shit, if I'm just being completely honest. So I think that helped me to be willing to do what it takes to win in business and do it for a long enough period of time that you can get enough experience and build enough skill to be successful. Because at the end of the day, sure, you can join a mastermind, you can pay for a course, you can hire this person or that person, but really like experience over time is going to build the skill that you need to become the leader that you need to build the business that is actually winning. Like there's no real shortcut, unfortunately. I wish there was. You need the reps. So like, what would I tell myself doing it again or somebody else in a W-2? Work relentlessly to get as many repetitions as you possibly can in this industry. The faster you can get the most experience, the better you're going to be. Like the biggest, quote unquote, biggest investors in the country, they all have a meaningful amount of experience. And experience doesn't just mean time. So there are investors doing 200, 300 deals a year who only been in the industry sub 5 years, right? But because of their volume, they've got a meaningful amount of experience. Or
Mhm.
there are bigger guys like the Erics of the world and folks like that who, do 10 million plus or whoever out there, Andy McFarlane, you name it, been doing hundreds of deals for a decade, that they've been around for a very long time and they have volume and they're still here and they're still big and they're still succeeding and running their team. And, um, it's when I look at the commonality between all of those businesses or anybody's real path, it's like, how fast can you get the experience and build this skill?
Yeah. One thing that came to mind as you were saying that, you kept on bringing up the word adversity. I just read last week Outwitting the Devil by Napoleon Hill. Not sure if we've read that one, but the
Yeah.
quote that he brings up over and over and over again is, with every adversity comes the seed of an equivalent advantage,
Yeah.
which I love that quote because he doesn't say like comes an equivalent advantage. He said comes the seed of an equivalent advantage. And that's exactly what you're talking about. You had all these seeds kind of given to you through all these adversities that you faced in business, in your life before business, all that kind of stuff. And the difference between you and someone else is that you planted all those seeds. You made sure every failure led to some type of success. And And that's what I think in business sometimes. A lot of these people who are succeeding the most, they're also just failing the most.
Yeah.
They're just doing the most of like everything, period.
Tons of like volume, man. Like there is something to be said about volume. I'm not talking about like deal volume. I'm just talking about like just pure
Mhm.
repetitions. There's also a great book called Talent is Overrated. And one of the examples they use in that book, they talk about Tiger Woods and his greatness. He was swinging the golf club with repetition and feedback when he was 3 years old. Is he just born talented, or did he start getting reps at 3 years old? And his dad, much like the Serena and Venus Williams, ensured that he had enough reps to be successful and had failed enough times to be successful, but not just failing with feedback and correction and then re-execution.
Absolutely. There's a Henry Ford quote that says, many a man who's supposed to have 10 years experience really has 1 year's experience repeated 10 times.
10 times, yeah.
That's exactly what I think about
Feels
was
like
as you
that.
say that,
Certainly feels like that.
like the goal was like for Tiger Woods, it was like, well, if I'm gonna have, I don't even know how many years of experience he had golfing, probably 30, honestly, at least, then I have to actually have that many years of experience, not just the same like little training that then I just like, because repetitions alone without that actual feedback in between, without actually trying to be better at every single step along the way, that doesn't actually get you anywhere. And I think we've all seen that when we've recruited people. Like, I don't know how many people you've found that just like the resume is just, I have been doing this for so incredibly long. This happens all the time in digital marketing, especially because the industry is like changing and stuff like that. Like when I see someone come across my desk that's like 20 years experience in digital marketing, I'm almost inclined to like not be interested in them because I've talked
Yeah.
to so many people like that where I'm like, how do you have so many years doing this yet have so little skill? And yet you'll also talk to people who've been doing it for, I'm sure you see the same with many roles in your business, like acquisitions managers, for example. You could have like a first year acquisitions manager who just crushes somebody with 15 years of sales experience. It absolutely happens.
Well, because sales, like digital marketing as a skill can be trained. Sales as a skill can be trained. What can't be trained is the kind of all the grit that it takes to actually do it success, all the iteration. Like people think that there's this like perfect playbook on digital marketing. You guys are testing, hypothesizing, and measuring results to get to identify what is the current best thing we could possibly do to deliver a result for our clients every single day. Like it's not none of that is cut and dry. It's like we did this, it got this result. We don't like it. We want to improve it. Let's try this. Okay, finally, we found a thing that will work for a certain period of time and then it won't. Like, same with acquisitions. Like, they got to have the grit to go in and iterate thousands of times in conversation in a human dynamic. So you're right. It's like you can an old dog sometimes doesn't want to learn new tricks or isn't willing to put the amount of work it takes to actually get a good result. They just want to do the same thing they've been doing forever, which may or may not produce results.
Yep, I think that's absolutely true. So as you're talking about your journey with Blackjack Real Estate, it sounds like for you, what drove success, and honestly, you said this was advice for anybody who's trying to transition from a W-2 to being a real estate investor, but honestly, I think it's fantastic advice for just everybody, period. Is you've just talked about like you got to get the reps, you got to get the feedback on the reps. Basically, it sounds like your approach to business is just do it and learn along the way, build the plane while you're flying it, and focus every day on making your plane just a little bit better. And that's what you've done with Blackjack.
Yep. And just be willing to do it and learn from it and like have this like everlasting desire for operational excellence. 'Cause I don't think it's something you can perfectly ever achieve, but it's something that you have to constantly be willing to work at to have a effective and an efficient result in anything that you're doing. So I just think, yeah, like that's critical. Like you cannot get better without repetition. There's no world where you just get better without getting a repetition, right? Whether that's in leadership or in business or like as business leaders, we all have some flaw. Like You might be great in spreadsheets and on the P&L, and I might be great on relationships and leadership and management. And we might have vice versa, like weaknesses, because we all have weaknesses. And I know in our business, we tell people, and it is important to, quote unquote, hire out your weaknesses. But like the first step is to be aware.
Sure.
Okay. You can't hire out and know nothing about a P&L as a business owner. Like you have to know about a P&L. Like it's not an option. I don't care if you like it or not. You need to understand numbers to a certain degree. You don't have to be I'm not a mathematician. I got a history degree. Like I like money. I know money math, but
Sure.
like
I mean, your
that's
1.9
not my
GPA suggests you're probably, you probably flourished from the very beginning of when you started going to school. You just always thought of yourself as just like the math wizard, I'm sure.
no, yeah, like literally 1.954 GPA in high school. Now, of course, the skill I acquired was a work ethic in the Marine Corps. So then I graduated magna cum laude from college, of course. But um,
Yeah. Well, and the type of intelligence stuff you were doing, I imagine is not just something that you naturally flourish in with
no,
absolutely
most
no like
most certainly
mathematical
not.
skills.
But I acquired the skills, even though I didn't have them, and it wasn't like my
Yep.
strength. And it's the same thing in business. Like, yes, to a degree, you do want to hire people that are better than you at doing the thing, but you have to know about it. You have to have a CFO that's reporting numbers to you, and you understand what the hell they're telling you because you have to make decisions on it. And your job in the business as the leader is to be the decision maker. At least at a macro level, when it comes to the money, you are the decision maker. So that's just an example of, getting reps as a business owner, getting better on something maybe you're not good at.
Yep. What's something that you feel like your real estate investment company is world class at that a lot of investors struggle with?
Yeah, I learned this. I learned this from a mentor one time, and our industry does, I think, an unfair job to folks by saying like, become a wholesaler, become a real estate flipper, become a novation guy, or whatever. And we've somehow created labels based on exit strategies. And the reality of it is you're a real estate investor. You might be a real estate business owner for an investment firm, and there are multiple exit strategies available to you. We're really seeing this come to light in a constrained market like today, where if you are just like, for example, in 2022, guys like, uh, gosh, Dan McClam from Investor Base, right? Like he kind of jumped into the residential game and was wholesaling to institutional buyers, hedge funds.
Hmm.
Really didn't do anything else. The hedge funds dried up, and he was like, "This sucks. I don't have skills to do anything else, and I'll just go build a tech company." Which he built a great company. Like kudos to Dan. No hate on Dan, but like that's an example of you'll be too single threaded to be successful in this business. So I think I learned this from Andy McFarlane. He's like, the first deal I ever did was a private loan for $5,000. I'm like, what do you mean? Like, that's not a real estate deal. He's like, no, it was a real estate deal. And then he's like, I early in my career found ways to make deals work. We didn't know it was called a novation, wholesale. We were just doing deals. We were executing deals that made money, which gave him a different mindset. And Andy is who I would consider maybe one of the goats in the industry, truly built a lifestyle business that does over 100 deals a year every year since 2013, sometimes many more, right? Um, and that really just kind of opened my mind to understanding what an effective business looks like in this industry as an investment firm. You've got to be able to maximize your return on marketing spend. So if you're growing any type of meaningful business, you have to control the leads. The leads are the oxygen of your business, something I learned from Mike Simmons, and which means you got to be direct to seller, at any kind of scale. Obviously, you can do a few deals a year, not at scale. You can probably do up to 20 deals a year buying from wholesalers in the MLS, maybe 30. And But if I want to build a business, a firm out of it, like I got to go do SEO and PPC and PPL and direct mail and be omnipresent, have omni-channel marketing. Like those are all like that. Like we're not making that stuff up. Like that's all a requirement to be effective in marketing. Like you can't be single-threaded in your channel. You have single channel risk in your business. Like that's problematic. It won't work over time. So if I go pay for PPC leads from Bateman and I come back to you in 2 months complaining that I'm not getting an ROI and I have one exit strategy, it ain't your fault. It's my fault because I'm not maximizing those leads. So I have probably 15 or 20 active projects going on. I got a couple listings. I've got some new construction. I've got some flips. I've got an assignment deal. I've got a couple refinances on rentals. Well, gosh, I look like a genius with my marketing because I'm monetizing my leads, and
Let me prove what you're saying, Adam. What's the average spread that you make on a deal?
53 grand.
What market are you in?
I'm in Pasco County, Florida. I do some deals in Georgia and Tennessee too.
All right, but it's mostly Pasco County, Florida. And the
That's
reason I
right.
ask you that specifically is that if anybody listens to this podcast religiously, you also know we interviewed Nick Perry uh, a few weeks, maybe a few months ago, right? And what Nick Perry, so if you don't know him, Adam, he's like he's
Nationwide guy.
nationwide, yeah, nationwide guy, right? And he was talking about like markets that are good, markets that are not. And he talked about how in the COVID boom, like Florida was great, but now he won't touch Florida as a whole because it's just not a good market right now because of the imbalance between supply and demand and the fact that days on market's going up and all that kind of stuff. So for him, he actually this statement I'm making is not at all a knock on Nick Perry because he has a really interesting model that works in its own way where he's doing like less marketing channels, less exits, but because he's choosing exactly which markets to be in and stuff like that, like that's actually
He's
working fairly well too.
geographically
Yeah,
diversified.
exactly. He's chosen a different form of diversification than the form that you've chosen. Both of them can be really great. But I guess my point here is someone like Nick Perry, who's used to just like picking up a deal and wholesaling it easily in a market, can't work Florida super well right now. Meanwhile, you have Adam Whitney there making $53,000 on each deal because he's figured out how to monetize them really well in a market that a lot of people say has been really, really hard for Florida. Yet you're thriving, right? So I'm not adding anything to what you're saying other than just proving
Well,
anecdotally. Like if you know Pasco County, Florida, $53,000 on an average spread is not normal. That is above average, and that's
above
fantastic.
average. Because we're able to like make decisions based on maximizing. And think if you think about this too, like if you can you have two ways to make money, like to create a spread. And when I say make money, I mean like net money. Like how do you create a spread? You have to create a spread between how much you can make on your deals on average and how much you got to spend to get them. And
Mhm.
this really crazy thing in the marketing world where people have said the person who can pay the most for a client will gain market share and ultimately be able to win. So if the market continues to constrain and I got to spend 12, 15 grand to acquire one deal, but I can make 50 plus on it, well, I can still buy deals and most people cannot. And I can still get over a 3x ROI at that spend where most people cannot. And I think you probably see this a lot with your PPC clients, especially your bigger clients who are spending 30, 40, 50, 60 plus in a market and own the market share. They can it's like this tipping scale where they can pay more to get the deal because they can make more on the deals, or they can do enough volume to negate that. And then it starts to wash people out of their market. So their cost per deal actually has a potential to come down. And their spread continues to stay meaningfully advantageous throughout the entirety of the business.
Yeah, I mean, what you're saying, you're proving your point before. Like, as the CEO, you have to understand the different aspects of the business and how they work together. Like, what you're proving to me now is that the way you see the financial models of the business is like you contextually understand it enough that you know how these different levers actually affect the bottom line of the business, and you use that to drive the strategy, which I think is super cool. And what you're talking about is it's a real competitive advantage. What you're basically saying is if you have a competitive advantage, you can win for a long time in business. If you do
Yep.
not have a competitive advantage, you can win for sure for a year, 2 years, 3 years. Who knows how long you can win? but you don't have any assurance that you can win consistently for the long term unless you actually are truly better at things that matter than your competition is. And I think that's a fantastic perspective on business because so often we just look at it like, I just got to go be like the vanilla real estate investor who's able to replicate what other people replicate. And because I do that, I'm going to succeed. And that's probably true in a really good market, in an expanding industry, like, whatever the case is, that's probably true. But you're never going to get like abnormal profits in a good market or good profits in a bad market unless you're truly different.
Yep, you have to create an advantage. Like that's I think that's and it's not easy. There like we talked about in the beginning, right? The business will ebb and flow, and I think you have to have you don't need a long-term strategic view, but you do need a midterm strategic view. People like me, where I operate with an unreasonable amount of urgency, like everything that needs to be done, I want it done yesterday. I also have to pull back and think about, as I'm looking at data or I'm looking at something we're doing, to say, do I have enough data significance to make a decision on this? Have I been doing this for long enough for me to understand if it works? Even though, like, I might go give, 20K to an agency to help me with marketing, which is uncommon in our industry. And I do that for 1 month and I'm like, oh, I didn't get an ROI. It's like, well, that's completely unreasonable. Like, there's a reason we have all these rules of thumb. Like, you really do need a minimum of 90 days of data, but really like 6 months of data. And if you can get to 12 months of data, then you're in the money. Because that's how long it will take for something to really show you what the truth is behind the data, right? Because if you go look at, I bet you, I know you have this data, Brandon, because you guys are smart, but like, if you look at your clients over time, they're getting, their return looks like a roller coaster over months, but when you draw that kind of median line in it, you go, oh, that makes sense. It's ascending up and to the right. It looks kind of like the stock market, but it felt like a roller coaster, right?
Yeah.
But at the end of the day, it's like, well, they got a 4-to-1 return on this marketing channel over 12 months, which, the longer you do it, the more spread you make, the more opportunity you have to invest in marketing in a prudent way. And there's just so much that goes into it. The point for me is the midterm view is a highly urgent like founder who is in a small business less than 5 or 10 million a year, where you have to, like, everything matters. It's like the NFL, like every game matters, every marketing channel matters to you, because you're not Apple, you're not overly resourced where you can just spend a bunch of money and not have a good result.
Yeah, it's like that combination between knowing, yes, everything matters, and you have to have that wider perspective on it,
For
right?
sure.
Like we're
And
not thinking in days, we're thinking in weeks. But, Alex Hormozy has a great quote on this. He talks about micro impatience, macro patience. It's kind of the approach that you're talking about here, where you're like, you're you're executing with so much urgency on the little details every single day that, like, nothing that can take 2 days will end up taking 5 days because we have to be like on it. But at the same time, when you're running a marketing channel and it's been like, a month and it hasn't worked out the way you wanted to, you can zoom out and you can be macro level patient, right? You're
yeah,
in the details on a day-to-day basis, driving things forward as fast as you can. But that doesn't mean that you're like, you're making rash decisions on and avoiding it doesn't mean that if you have a bad quarter or a bad month in your business that you think that's the end of your business, because you still have that wider perspective.
right. Or the end of that marketing channel, or the end of, and like, things change a lot too. And yeah, I know you see this. Like, PPC is probably the most interesting channel because, um, let's say I'll hear people say like PPC doesn't work in my market. I'm like, that's not true. Let me go to Google and look up anything in your market. It's weird. I see a ton of sponsored ads. Why would people be spending money if it doesn't work? Across all industries, by the way. Maybe it doesn't work for your model right now. Maybe it doesn't work for the resources you have because you can't spend enough, or maybe your sales team isn't converting enough, or maybe you don't have enough extra. But it's not PPC that's the problem per se. It's that your company may not be ready for PPC, or the timing or the sample amount of time just isn't ready. And you can put that for all marketing channels. I use PPC because we're talking, and it's probably the most It's one of the best marketing channels that gets you a great result, but also it hurts when it doesn't get a result because it is a more expensive marketing channel in some cases. But yeah, you're right, dude. There is a macro view that you have to have. And honestly, it's not easy. Like when I go and I commit to something, like I have to tell myself, like, dude, you're gonna do this for 90 days no matter what. I don't care how you feel about anything, unless you see some crazy red flags, like you're committing for at least 90 days. Like buckle up, you know?
That's a
So
great perspective.
I got to kind of pre-warn myself because I will be like, what the heck, man? Like these leads, like, I got 5 leads, I got no equity right out of the gate and it hurts. Like this isn't going to work. It's like you get all that. That's normal, by the way. Like that's not, those feelings are very normal when you see that, especially as a smaller business. But if you give it enough time, you'll get, if you quit at lead 5, lead 12 was going to be a 60K deal and it would have made your thing look like it had 5-to-1 return and yada yada yada. So yeah, there's just a midterm kind of macro approach. You have to just painfully get yourself on that page where you can do that.
Yeah, if it's okay with you, Adam, I want to shift gears a little bit because we're coming close on time here, but there is a topic I want to make sure we touch on the idea of you running an investment company, having a lot of different exit strategies and that kind of thing. One thing that you mentioned to me one time when we were talking was what you guys are doing with manufactured homes, which I do think is a little bit unusual in the industry. So if we could kind of like, go remove ourselves from the strategic level and go a little tactical for a minute. I'm really curious to hear what that strategy looks like.
Yeah, I'll give some kind of, let me give, I like to back everything with data. So ATTOM data, ATTOM data, which I'm sure you're familiar with, real estate kind of data provider, looked at flipping ROI in 2025 and margins were down like 25%, right? And they're just looking at gross spread basically on a deal. Like they don't know what the rehab cost is or people are making money. They're looking at
It's like
gross
the
spread
worst it's been since the
since
financial
2008.
crisis.
Since
Yes.
2008.
And it
Yeah,
was
like
and it was significantly worse in 2008 than it is now, but still it has not been that bad since as bad as it is now since 2008, which is worth thinking about.
so if you think about that, I mean that's an indicator, one single point of data that the market is constrained, especially for house flippers. Then if you go a little more macro and you just look at inventory, where in many major metros, it's meeting and exceeding the amount of inventory on market pre-COVID time, um,
Mhm.
prior to us going into the big kind of inventory constraint. So like people have more options to buy, things don't move as fast. It's not a bad market or a good market, it's just the market that it is. And if you go look at manufactured homes, demand on manufactured homes is up in a meaningful way. Like they're like growing percentage points month over month in terms of what's being ordered from the factory, specifically new manufactured homes. So you ask, why is that? Well, if you look at Florida, I'll take my market for example, where the median price point is 420, and manufactured homes brand new are selling between 225 and 350. So it's below point and people can't afford it. We're talking about manufactured homes on land, owned land, not in parks when it comes to this. We saw that as we kind of look at everything from a supply and demand perspective. That's where kind of the inefficiencies are in the marketplace, right? So affordable housing has been on the news for almost 3 years now as the number one problem in real estate. Like the problem is houses are unaffordable. Literally, somebody cannot afford to buy houses. So cool, where is my buyer at? Well, my buyer's operating in a lower price point out of necessity. So well, I had such a negative connotation for manufactured homes. I remember like years ago, my CEO was like, "Let's flip this." I'm like, "No, dude, I don't want to. I don't want to own I don't want a manufactured home on my balance sheet because I'll never keep it. Like that's gross, trailer trash, right?" She's like, "Look, we're gonna make like 50K plus on this deal. If you don't want to buy it in the company, I'm gonna personally buy it." I was like, "Okay, we'll buy it." We made 60K and we did the flip in like 3 weeks. It's easier to flip. And then what I realized was manufactured homes didn't have HUD standards until summer of 1976. So pre 1976 manufactured homes, you can't really sell them on the back end on the open market because they're not financeable for end buyers. Now, there's some financing, some very predatory like financing for those houses. So now I start going, well, shoot, nobody's marketed into this crap. Nobody wants to buy these. What if I did? What if I bought them, tore them down, and put a brand new manufactured home on there? What would that look like? So we started down that route, and I call it a scrape and replace. Basically, I'll buy something, scrape it off, and put a brand new manufactured home on it. And the economics are really solid. Like you can make 50, 60K a pop at the ARVs that I'm talking about, right? A nice 4.2, 15 to 1800 square feet manufactured home on a half acre and acre land here in Florida, I could sell for 330. So that's pretty meaningful. And you can get the junk mobile homes that existed prior to on that land for relatively inexpensive pricing. So there's margin to be had. And so I set off to kind of learn all the nuance of it. And there's a ton of nuance that goes into it: how you buy them, who you buy them from, how you get the best deals, how you finance them. And it's been a really productive model for us. And if you think just direct to seller marketing, not a lot of people marketing to those folks. So, direct mail response rates are higher, and they're not getting 20 offers on that deal from investors. They might be getting a handful. And it's just a less competitive space. There's high demand there, and they move fast. Like I'm talking, like I literally am selling some of these things with 1 day on market, and they're financeable to normal conventional VA and FHA buyers if you do them right.
Interesting. All right. Well, that's a cool niche. So you're doing you basically, as I understand it, you have a subset of your marketing dollars that's essentially going directly to just this. And are you filtering for like, well, the manufactured home is older than 1976 or whatever the specific date was and that kind of thing?
I think I'm not filtering that deeply. So like in Pasco County, there's maybe 8 to 12,000 total records in this market that are like manufactured homes on land that are owned. So like I can put a piece of mail in everybody's inbox every month pretty easily and pull a deal out each month, right? I can buy from wholesalers. That's, by the way, another competitive advantage because nobody else is buying those deals. The wholesalers love it. I'll make an offer on all those manufactured homes that meet our criteria. And I am looking for, I don't care about the age of the home. I'm looking for half acre or greater, owned land, like that kind of thing is important to me. Location, obviously, geographically will determine the after repair value. So that matters. If I'm going to tear it down and put a new one on, I need to be able to make something on the back end. So I keep the kind of filter pretty wide on it, and I like to. There's not enough. It's not like I'm going into a market where there's 200,000 homes, and that would be pretty meaningful in terms of a direct mail spend or calling or something like that.
Yeah, it's just such a small niche, and I imagine you're just dealing with really high response rates compared to what you normally would, which is what everybody would get if their postcard was the only one in the person's mailbox. But
Yeah, exactly.
that's not
And they're like,
usually
"Oh,
how it
somebody actually
goes.
wants to buy this thing? Oh my gosh!"
Yeah. Well, this has been awesome, Adam. I can't even count how many different topics we've touched on, but thank you for spending the time with me today. If anybody wants to get in touch with you, I imagine the main reason would be for seven figure flipping. Um, what would be well, first, you haven't talked a ton about that. If you don't mind just sharing like the brief overview, like what is it? I can tell you I joined seven figure flipping as of this year, and I went to one event, and what you talked about it there being a different culture is absolutely true. It was like one of the richer experiences I've had at a mastermind that I personally enjoyed. So if you don't mind sharing just a little bit about that and how somebody can get a hold of you, that'd be great.
Yeah, so seven figure flipping, I said this a little bit in the beginning, but it's about service, legacy, and impact, right? We've had some of the best investors across the country build their business here, hundreds of deals a year, like all that stuff. But that's not unique to the industry. Like there are plenty of great investors, plenty of great groups out there that can give you the playbook, right? And the playbook is not, you're not going to find any like secret sauce too much anywhere. You're going to find good operations in some of the better groups. But for us, I think what makes us unique is service, legacy, and impact are really important to us. So let's just talk real quick about legacy and impact. We have a passion project called Teenage Tycoon that our members' kids are a part of. It's a teen mastermind for 12 to 18-year-olds that our members often participate with their kids, plus other people from outside of our community can participate. And it's all about leaving a legacy and showing young folks, giving them a head start on financial literacy, on entrepreneurship. And it's not just about real estate. We've got multiple 9-figure business owners who have come in and mentored our kids. Russell Brunson, Donald Miller, you name it. And just people who do day trading, like just opening their minds to what opportunities and possibilities are out there beyond maybe just the traditional college path. And of course, like the college path is fine. We're not telling people not to do that, but we're just showing them what else is out there and what opportunities, and hopefully teaching them really good fundamentals when it comes to financial health. So that's what we talk about for legacy quite a bit. For impact, we had some members years ago create a foundation, a nonprofit. Not we didn't create it; members of our community created it. It expands way beyond our community. But it's the nonprofit that we support. It is called the Seven Figure Foundation. It's led by an all volunteer kind of entrepreneur board with one executive director who's part time, and they believe you can either give your time, your treasure, or your talents. So what's unique about them? One, all their money goes, 90-ish%, 95% of their money actually goes to what you're donating towards. And it's all about infrastructure. So like last September, I went to Tijuana and built 3 houses for families in need in Mexico. And then I'm going to Cabo this fall to build houses. So it's just like, instead of just giving money, you get to go have the experience. And I feel like that is really, really powerful. And people bring their younger kids, I guess they're 12, 10, 12, 13, 15-year-old kids to get grounded a little bit and see what it's like in other parts of the world and have that experience. So just really powerful. We're very family oriented. Like it's not uncommon to see a whole family come to our events and be enriched with the experience of learning entrepreneurship, being a business owner and a real estate investor. So I would say that kind of sets us apart. Of course, all the other typical real estate things you'd experience, marketing, sales, all that kind of stuff is a part of it. But that's probably what makes us a little different. If you want to find me, official Adam Whitney on Instagram is probably the best way. Very active on social media. It's me in there most of the time. So very responsive. Love to connect with people. Love to serve. Love to help people.
Amazing. Thank you so much for taking the time to share so much of your wisdom with us today, or at least a small piece of it. For
Thanks,
everybody
brother.
else listening, I will see you next week.
Yeah, appreciate you, man. Thank you so much.